You have spent years, possibly even decades, building the business of your dreams. And you've had in mind this big exit, this sale, where it's your retirement dream, this big payoff, which you've earned through all that hard work, sweat, and tears. But so many Australian businesses get to the point of due diligence and their sale falls down. So today, Simon Youlton and I from the headquarters are going to break down why so many businesses fail due diligence and what you need to do about it. All right, Simon, so we get an offer on our business. It's like, yay, everything's happening. We're all good to go. Money's going to be in the bank. But oftentimes that's actually just the start of the process, right? What does it actually take to get an exit across the line, to get that money in the bank and actually have that sale be successful for an Aussie business?
Yeah, well, I'd say nerves at that point are pretty high, and you need a lot of patience from that point. So what I see very frequently is people reach what we call heads of terms, if we want to be technical, where they've essentially got an offer on the table and they believe it's still done. But really, that's probably the point at which a lot's going to start to change. Emotions start to run high, and you really have to, what's the phrase I often use is don't start dining out on that deal. It's by no means a done deal. And the real, if you call it, the inspection begins of the business from a buyer's perspective from that point onwards. So it really is it's a point where I think you can say you've achieved interest and somebody's now going to put some resource in to try and really understand what they're looking to buy. But it is by no means a done deal, Kathryn. It's the point where you really, really have to say, okay, the race is about to begin, the race to the finish line.
We've got the offer or we've got interest. But so many businesses fail to actually get to the finish line, like you said. So you definitely don't want to be buying that holiday home in Noosa before we've got through a whole heap of different things. Can you talk to me a little bit about some of the things that you've witnessed, like the major things that happen that prevent that sale from actually going through?
Yeah, absolutely. Now, I can tell you this, as I know you've been in this position, and as have I, but honestly, one of the major things is the owner. So a lot of people think a deal falls over because the buyer doesn't proceed. But from my experience, it's often the owner. And the reason for that is quite simple. The owner's been involved in the business from its inception, normally. And the problem with that is there's a lot of emotional attachment to almost everything in the business. Because if the owner wasn't attached to it in some form, let's face it, it wouldn't be there. Okay, so when somebody's then inspecting the business, as they do post that offer, so post that heads of terms signing through to the point of what we call completion, they've popped the bonnet, they're having a really good look and they're running tests and they're actually questioning the decisions that the owner has made in the years building that business. And it can be really, really uncomfortable. So that would be the biggest standout reason, without a doubt, is the owner.
Yeah, and I totally get that, right? Because it's your baby that you've spent, particularly, a small to medium business that you've spent probably, many years, if not decades, building it and, sacrificing time away from your family to be there to build this thing. So it's like your baby. And then someone comes in while that cash is really exciting for you, they're going to do due diligence and they're going to be asking some uncomfortable questions. So it's a pretty emotional moment, right? Do you have any advice for people going through that and how they can separate themselves from the emotions when they're going through due diligence?
Yeah, I do actually. I mean, look, the benefit that I think I bring to any of these kind of conversations, particularly when I'm talking to owners who are looking for options, one of which is often an exit. I always say to them, look, I've been in the same position, and multiple times, and the first time it was emotional, so I understand and I feel their pain. So I think the first thing to do is to acknowledge there are going to be emotions, and you can pinpoint when they're going to come up. There's certain areas in that due diligence process that will cause tensions to rise and emotions will be a lot higher. But I think if what I like to do is to try to get the, and this is the benefit I bring by a pair of eyes outside the business. If you can try to get the owner that's looking to exit to focus on their business as if they were the buyers, to step into the buyer's shoes, they can kind of see the other side of the negotiations, if you want to call it that, because it is a period of negotiation too. And I think that that's what a lot of business owners fail to do. They see it from, it's their asset, they're selling it. And this is the wrong starting position, really. I think they need to look at it from the shoes of the buyer. And that will help manage the emotions, because you can kind of foresee then the reason why certain questions and challenges, as it may feel like, are being made during that process.
I think I totally see that, and that's something that you and I both experience together and individually. And look, another one of the things that I think that comes up all the time is just a gap in expectations. So the owner's coming in, it's like selling your house that you've lived in forever, and you've got these rose-colored glasses on about how perfect the business is and how perfect the house is, and your renovation was amazing and your decor is incredible and the price is XYZ, and that investor or the buyer is coming in with a completely different set of glasses. What's that that expectation gap? How do you, as a business owner, remove those rose-colored glasses so that you actually get the sale across the line and don't be offended by what's going on in the buyer's eyes?
Yeah, look, being a business owner is a very lonely role. Right, we know that, we've been there ourselves, and you could have a lot of staff. You could have 50 staff, 100 staff, more. The reality is you're only prepared to share a certain amount with staff, and there's very good reasons why that's the case. You've got to be careful how you manage that information, particularly when you're talking about a sale and so forth. The reality is, if you're only talking to yourself, which often you are as a business owner, you're going to hear the voice you want to hear. That's often the case, right? And so your expectations are set at a particular position, and you almost start to succumb to that, and then you become disappointed as you go through the process, and because you've got other people involved, another party that's going to have their own expectations, right? And so if you are working with someone outside of your group, your normal group that you can trust, and be able to have these conversations with whiteboard these ideas, these suggestions, what might happen post acquisition and so on, because that's equally important as what happens before the deal gets done. You start to find you get another voice of reasoning, and it can assist with you in that process and through that journey. So avoid just talking to yourself. Reach out and get some other trusted support that you can really rely on to just get you perhaps thinking about the thing you may view as a problem or an issue, or that sort of deviation from where you want to be. Just get you thinking about it just a little bit differently.
Yeah, and I think one of the things, I'm going to give the headquarters, you and I, a real plug at this point, that one of the things that I think a lot of business owners don't do, as you say, they're talking to their partner, they're talking to their spouse or whatever it might be, or maybe their dad or someone, uncle who owns businesses. But getting that objective assessment and early viewpoint on what is the true value and where there are gaps and risks is really important. I'm going to give the headquarters, you and I, a bit of a plug here, but that's where we can step in and we can give you that objective assessment of what does this really look like, and where are the gaps and where are the opportunities to increase the valuation and increase the growth, and give you lots of options so that you go in clear-eyed rather than with those rose-coloured glasses. Would you agree?
Yeah, I mean, look, 100%. And my view on this. I'm a strong believer in the fact that to get a deal across the line, it's not a quick process. So you're going to invest a lot of time, and you're going to invest, not just hours, but you're going to invest a lot of time other people's as well. If you've got a family at home, it's going to be a massive impact on those two when you're going through that process. So you sacrifice in lots of things, you invest in lots of time. If you don't know for what, because you've not really done that assessment early doors, we're talking months that you can potentially waste if you haven't actually really understood the position your business is in early doors. So my first transaction I ever did when I exited was purely, I'd say, by chance and a little bit of luck. But then every business thereafter I've built and exited, from day one I've had the plan. And I guarantee that any business that exits, any business owner, if they set up another business, they will start that plan day one. They will not get in the business, build a great business like most of the people we speak to have done, and then look to exit, because it's hard work. It's a lot easier if you start, early doors. And I think that that's really the fundamental thing that we bring at headquarters to business owners. We can give them the pros and the cons. Obviously, we can't go back in time, but we can certainly tell them the quick wins that they can find and the things that they should really focus their time on. Because time, it's a precious commodity. There's not a lot of it, and most people we speak to have already made their decision that this is the path they want to go down, and they need to therefore be in that use that time valuable to make sure they get that deal done.
Absolutely. So, all right, let's talk about the positives first, and then I'm going to go further into the negatives and why exits fall over. Let's talk about the positives first. So we've got someone interested, they've come along. What are the value drivers that buyers actually care about?
Yeah, well, I can tell you the things they don't want, and that's the easiest one. They don't want a headache. Okay, I say that all the time. But no buyer wants to buy a business that's going to present them with headaches. So they really want to understand what they're buying before they even commit. Okay. Unfortunately, what you often find is, people who've run businesses are great because they're up against some opposing odds. If you think about it, 60% of businesses don't survive more than 3 years. So it's a very hard thing to build a business. So if you build a business, you've already done well. So you're now at a point where you've built a business, you're looking to exit the business. And you're in that position where you're trying to present the business for sale. You've got a whole load of ideas as to what and how you think it should potentially work out, and then you're in that position where you have people constantly questioning and re-questioning again, and that's the first step in understanding what a buyer wants. They want to easily understand your business. They don't want to have to keep questioning and questioning and questioning, because they know that when they're doing that, that can almost feel that the person that's selling the business is not trusted. Okay, and this is one of the big factors in what causes these deals to fall over and a breakdown of trust to happen. So they really, and it can be as quick as this. I mean, this is a reality. It can be great. We're keen to move forward on conversations with your business. Can you give us access to your data room? At that point, a lot of business owners are, well, first of all, what's the data room? There's no shame in that. A lot of businesses say that. I said it the very first time, and I'm going back 15 years. It weren't called a data room then, but what is it? And then the stuff they expect to see in there is not there. So as a business owner, you're trying to keep your numbers strong and better, right? You want to present a very good picture, and you're trying to rustle around on your own because you won't talk to anybody else because you don't want to scare anybody else off, especially your staff. You're trying to rush around and get all this information together and then put it into a data room that you probably don't know how to gain access to, right? So it can be a complete minefield. But businesses want to see that. They want to see that organisation, because the chances are the business buying you is going to be the similar size to you or bigger, probably bigger in most cases. So they're going to have these processes in place and things in place that you may be rustling around now to try to put together. And that's why you really need to give that confidence early on that, look, I may not be 100% perfect like you, but I've got a good effort has been going on here and a good amount of information is ready.
Yeah. And I mean, I think this is where we get really carried away about the dream at the end with that big number and the Noosa beach house. But there's a whole raft of things that happens in due diligence, and that's generally where everything fails. So could you just explain what due diligence really is and why it would fail? What are the most common reasons that Aussie businesses that sale fails in due diligence?
So think of due diligence, it can be super complex, and depending on the size of the transaction, the kind of sector that you're involved in, it can be another level altogether. So it really isn't the same for any one business, and that's the thing I learned operating across different sectors, is that sometimes to get through due diligence is a lot easier than other times. Okay, so it really isn't a one size fits all. So you can't just sort of get a list and say this is due diligence, this is what it looks like. It's very different for each sector, and I think a lot of people fail to understand that, and those that do it really, really well. But fundamentally, due diligence is an inspection of what you have presented to the buyer at that previous point in time. So imagine you're in a position where you've talked your business up, you've got someone really interested, and you've got a great business. You're perhaps just stuck. You've presented a good story as to why this business can do great in a new buyer's hands. You've perhaps talked about figures and numbers and how the transaction could potentially work. Everyone's kind of shook hands. There's a contract in place normally called a heads of terms. We do sometimes, unfortunately, see deals happening without that, but normally that's the first point to where you try to iron out any of these hurdles, and then you start that process of inspection where the buyer is actually trying to prove to themselves that what they think they're buying, they're actually buying, and this is where the deeper dive into the business takes place and that interrogation happens, and that, again, I'll stress again, is super uncomfortable the first time you go through it. And that's something even we try and do, spend a lot of time with people trying to get them to really understand, and I'll often play the role as the person who's buying their business, to get them to understand the kind of questions they're going to get asked. They wouldn't have even thought about some of this. And depending on how thorough the due diligence is, depends on how painful that process could be. But I've never done a single transaction on my own or with a client where anyone's got to the end of it and said, that was really, really good fun. It doesn't work out like that. It's a painful period, but it's a period you have to do.
Yeah, it's an absolute bloody nightmare to go through. But the way that you can turn it into less of a nightmare is preparedness and having someone who's trustworthy to banter with about all of these things beforehand, so that when you go in and actually go through it, you're not being surprised. So what are some of those things that they're really looking for in due diligence? So you're going to be looking for, say, financials, you've got systems and processes, you've got legals, you've got, those sorts of things. What are some of the things just in general that they're going to be looking for that a business needs to be prepared to go through with a buyer?
Look, it starts with the one that everybody loves, and I'm saying that tongue in cheek, financials. It's key to understand the strength of the business, where any issues may be, cash flow, forecasting, things that a lot of business owners actually find boring or depend on their accountants to actually work through with them. So there is an element of being able to explain your numbers and being able to demonstrate what the business has done historically, particularly if there's been any upturns or of course downturns, how the business runs and functions from a financial perspective. Because there's a strong chance that somebody buying your business, they're going to be borrowing funds to do so or using cash that they've got. Either way, they need to understand when they're going to get a return on that investment. So that is really important, that your financial integrity is well articulated, well presented, not over the top. Because if you're selling and you're a construction company and you're selling to a plumbing business, for example, they might not have they certainly probably won't be accountants. They may rely on an accountant, but they may not even have a chief financial controller in the business. So nobody needs or wants to have a degree to understand what they're looking to purchase. But they will need to have a really good oversight of how the business has been functioning. The other thing that's often overlooked, and this is again because of the fear factor of sharing information, is staff. Okay, so a lot of the businesses we work with, they underestimate the value and the importance on staff, particularly if they're lower level staff. Okay, that could not be further from the truth when you come to do a transaction. A lot of the staff have relationships with clients. A lot of the staff know the processes, and a lot of the processes are not written down. So if there's flight risk of staff, that can be a big issue for a transaction, any transaction, okay? Because the value of the business diminishes quite quickly. So looking to see how the staff are engaged, how they're employed, how they're trained, mentored, how their appraisal systems work, and so on. They're all the kind of things that would be asked during due diligence. And they can even be asked to be met with, which is a surprising thing. So an investor may sometimes want, or a buyer may sometimes want to meet key staff. And that's where you have to really be good at your stakeholder management, because you have to break that news to somebody sooner than you perhaps would like. Not in all cases that happens, but it happens. It happens more often than not now as well, just because it's so much easier for people to move roles and transition.
I've heard you talk about this with almost everyone that we've had conversations with, just how key your key staff are, and how you've learnt over time that this is one of the key areas where deals fall down, and actually that transparency as soon as possible and locking those staff in with really great deals is going to mitigate the risk of a buyer disappearing, right?
It is, and I don't think I can recall the time I've had a conversation with somebody and we have not identified new key members of staff. And what I mean by that is someone will come to me and say, no, it's fine. I know this, I deal with this. And almost the staff in there, they will pick a key person when I ask about key people, and we will talk about that person, and I'll ask about every single member of staff. And if there's many of them, that process can take a bit of time. And we will find and identify more key staff, but to a different degree than they had first thought before we've had those conversations. And absolutely, staff are, in my view, and I actually hate the word staff, the team are often the real value drivers that can really drive that value in a different direction in a business. So making sure they're tied in some form, and it's not always monetary, but is a really important factor. And there are so many different ways to do that. And Kathryn, you just mentioned it. I'm a big believer in, and I've done this the same in my own businesses, in making sure I've got my key staff, aligned to what I'm doing. So if I'm really chasing profit, they're aligned to profit. If I'm really chasing an exit and a capital event at some point, they're aligned to that. Okay, and what's going to get me there is strong profits often. So I really do that. So I've got no issues with doing that, and I find the reward then for everybody is so much better, and the buyer, it just is even more excited, because they're not just they can buy anything if they've got the money. But what you can't buy is it's that human capital, and that's what you get if you've got a team that's really, really well aligned and stuck in with that business owner that's about to look at those kind of options.
Absolutely. I think we ought to do a video just on that for sure over the coming weeks.
Yeah.
So, okay, let's talk about some skeletons in the closet. If you have some skeletons in the closet, what do you do, Simon? Obviously, that's big risk in terms of a deal disappearing. What do you do if you know that there's something there?
Yeah, okay, look, I'm going to say a bold and a brave statement here. I think that I would say every business, but I reckon almost every business has some skeletons in their closet, or bodies, okay, for a better word. And how many depends on the business, depends on how long it's been running. There's no issues with that if we know about them, okay. The whole point of due diligence, again, it's an inspection. It's a bit like selling a house and you've got a structural survey and you've had cracks in your wall because there's been some subsidence, and you've quickly plastered over it and painted over it in the hope that it don't get spotted. Anybody really decent coming in there doing that inspection is going to pick that up, okay, because there's going to be other signs. Things won't quite align, okay, there'll be other things out. And that's the same with skeletons, as we call them. If there are issues, the whole point is to work through them. Now, this is the benefit again, and I'm going to give a plug now to headquarters. This is the benefit again of when we work with clients. We're not buying your business, so you tell us what your issues may well be, and we'll work through them. Many deals get done when there's been issues in the past. Okay, I've worked with a lot of companies that have been regulated in some form, particularly in the wealth management space. Many of them have had issues, as that sector often does, but deals still get done. But the issues explained, the risks for the buyer is explained. There's indemnities that can be put in place, and warranties that the sellers can warrant to the buyer that if something comes back up in relation to this, then I will cover it, and so forth. And so they can all be worked through, even the worst of the situations, but they cannot be hidden, because they will be found. So the best thing is to be honest with us, and we can help you work through them and tell the story. Often there's two sides to the story. If you don't tell the story, the buyer finds out about something, they'll build their own conclusions. They might not even talk to you about it. Deal's off. It's as simple as that. So we can work through them and present them in the right way.
I think that's fundamental to making sure that you get everything done. And you're right, there is literally not a business in the world that's not gone through something that's had the perfect history. So totally get the right words, get the right story, be as transparent as possible, and you've got a really good chance of everything going really well. Okay, so I want to move to probably one of the biggest reasons why exits fall down or sales fall down, and it's about the owner dependency. So that over reliance on the owner to make decisions and be involved in the company, and it particularly becomes more difficult for an owner to sort of navigate their way through this as they become really emotional through the buying process. Just wondering if you can talk a little bit about those more specific concerns that buyers might have about owner dependency, or that might make a deal too risky to move on with.
Yeah, look, I mean, owners, again, by their very nature, they've took a risky move. They've set up a company, often quit a job, stable salary, or there's many different factors. So by the very nature, you can assume most people running a business are more the opposite direction to being incredibly conservative. That's just by the very nature. So you've got, and often they struggle to trust people because this loneliness, this inability to be able to feel comfortable to talk to people in the business, it creates that element of I'm not quite going to share this, so things get remembered in the head. And then obviously that's all fine whilst the business is functioning. Key relationships often are maintained and controlled by the business owner because, quite valuable. If I pass this on to David, he's going to maybe move on and take the client. I thought about passing it on to Sharon, but not sure. I've had spot a few signs there, and she may be a little bit unhappy, or she might ask me for a pay rise. You've got a whole raft of reasons why things end up in the head. Business owners are super busy. They don't stop and have time to write this down and to start building processes and so on. So that's the first major thing, controlling the main clients. And I'll give you just a very quick example of a transaction we were involved in, and it was ironically two different businesses but in the same sector and very similar revenue and so on. So and they had similar profit and so on. So they were in the gas fitting business for residential homes. Two of them, roughly $2 million a year each, they were turning over, making between 20 and 25% as a profit. So really very similar, slightly different headcount in terms of staff. And one business sold for a multiple of profit at 1.5 times, and one business sold for a multiple of profit at 3 times. So twice the difference. And the reason being, the one of the business, the owner hadn't got his systems or processes documented. He had 70% of his revenue coming from something like nearly 90% of the top clients. So basically, his top clients, the concentration of clients, and they were all controlled by him. So 90% of the clients were all controlled by him, and he was dealing with the day-to-day work himself. Okay, so he was very much running the business despite having other staff around him as a one-person business, versus the other business had an ops manager in there dealing with the day-to-day items. Their representation of clients that he looked after was closer to 8%, so he had less influence. All the systems and processes were documented. So you can just see there the difference of the two different types of businesses and how that come into a double the value, but they was effectively the same business operating the same clients.
Totally fantastic case study. Absolutely. Let's talk about some of those kind of horror stories. So that wasn't a particular horror story, but you've been through lots of transactions and seen a lot fall over. What are some things that people should really have their eye on, and how can they make sure that they're prepared enough so that that just isn't on the agenda?
The real thing that needs to be really not underestimated is your vision, is how you're really going to get this deal done. Why? What's the mechanics for the deal? And why are you doing it? So you've got to ask yourself the why, because that message at some point is going to need to be communicated to your people. It's going to be needed internal and external. So you've got to really be clear on what that what that's going to be and how that's going to benefit both the internal customer, your staff, and also your external customers, those that you're currently earning your revenue from. Because sooner or later, that conversation is going to come up. And there's been situations where, when I was actually a buyer of businesses through a private equity company, I would turn up to the business where we've had really good negotiations throughout the whole process, good open conversations, turn up to meet the staff, and the horror was, it was the first time the staff were learning about the transaction, and it was just the worst possible experience. It was almost as if we'd come for everyone. I make sure after this time, I remember this happening, it never happened again. It was as if we'd done a hostile takeover. It was, but it was all done in good faith, and it was just a horrible experience. So I think that, and for everybody, as you said, for absolutely everybody. So it's really crafting the message and the vision, and then understanding through real careful stakeholder management. If we use a term that's been around for years, but it's so crucially important. Who are the people we need to talk to? When? Why? How? And it's getting that clearly mapped out, and that's going to avoid a lot of the horrors, because unfortunately the people you can't, you shouldn't be able to, and you can't control, and that's right. But that's the way. That's where we see these deals go wrong, when that's not managed carefully and properly.
And it's so sad, right? Because like we've been saying, it's your baby. You've spent years and years and years building this thing, and then to have it all fall over is just an absolute nightmare for everyone involved. And you particularly don't want that to happen to your staff. And then particularly if it falls over, then you've got to manage the staff moving forward with a sale that didn't progress. So what a nightmare. So Simon, you and I started the headquarters because we believe that there's a crying gap in the market where most business owners who want to sell, who have that dream of, buying this business becoming their retirement, and, the big dream has been building it for all of these years to get that big payday. And they often, the first person that they'll go and talk to, maybe aside from their accountant, is a business broker. And we truly believe that there is a piece that's missing between that decision and going and contacting a broker, which really is all about preparedness. And you and I know we share this view that you'll get a better outcome if you're slightly more patient with the process and you leverage a bit of time to get prepared, make those decisions, get clear on the vision, etc. I'm wondering if you could talk a little bit about what has driven you to start the headquarters with me, and then also what it is that you feel is ultra valuable for small to medium-sized Australian business owners that fills that gap between I want to sell and I'm going to contact a business broker.
Very good question. And the reason it's a very good question is if I had $1 for every time somebody got on a call with me and thought that I was a business broker, I'd be doing incredibly well. And the reality is we do a very different role, but we work very closely with business brokers, lots of business brokers, investors, and so on. And the reality is when I get to speak to clients, and you'll be very similar, Kathryn, and business owners, they're in a couple of different categories, really. They either want to have exited their business yesterday, so they've really had enough, like it's breaking point past, and they've literally just reached out for help, and they want help as quick as possible, immediate help, because they've had enough. Or they're in the phase of they just really are considering their options, and one of which could be a sale, could be raising capital, could be all sorts of different things, succession planning and so on. So there are them two different categories. Unfortunately, we see more of the former one I described, where they really do need to get out. And they think I'm a business broker, so they're on and they're trying to be positive about it. But I can tell quite quickly that they really want to get out of this business. And if I said to them, right, here's a check for X, and it was the right sort of number, they'll say, right, okay, this is how you do the alarm system. Put the bins out on a Thursday. Okay, this is the real fact of it. But unfortunately, what there is this process to go through of getting ready, finding the buyer, or getting the buyer happy, keeping your staff happy, working with your family and your friends and people, because this is going to have a major impact on your own life, and then dealing with all the stuff, what happens after, which is often as longer than what happens before. Okay, so there's a big process to go through, and it doesn't matter if you're a big business or a small business, it's going to be the same process. Now, business brokers in particular you raised, and I work with a lot of them. Often they refer a client to us that's not ready for a sale, and they're not able to sell the business. And we can work with that business to get in a position where we can then say, okay, it's now sellable, and pass it back. But that's not often the case because it's just not sellable. It's because the expectations of the seller are, they believe their business is worth there. The business broker has told them, no, actually it's worth there. And there's that gap. And so what we do is work with those businesses to get them to a point, not always where they get there, because they don't have the time or the patience or the energy, and they've just had enough. But we can certainly explain what's going to drive the difference between there, and that's what we find is that's where we find we add our best work, is doing that, and also then it's understanding how a business broker wants to sell the business. If the business broker doesn't sell the business, they don't get paid, right? So they want something they can sell. So everybody's interests are aligned. Owner wants to sell. We want to help the businesses get to a position they can sell. Business broker wants to sell the business. And buyer, guess what? Want to buy a business, but a good business. So that's the process that we would work. We generally work through, and that's why I think business brokers are really important. But I stress, we're not business brokers ourselves.
Yeah, absolutely. And I think that there's a piece here that I really want to emphasize to everyone who might be thinking about, who might be in that camp of, I've had enough, this is too stressful, I need to get out. If you can just be a little bit patient and work with us to get all the ducks lined up, that payday is possible, but it's unlikely to happen like that. Right, we're going to have to do a little bit of work to get you there, but I absolutely don't want this conversation that we've had today to scare anyone off and to have you think, oh crap, I'll just close the business down instead. This just all sounds too hard. It isn't actually hard. It's just a matter of having someone to hold your hand through the process and get it all lined up so that you can get the outcome. You agree, Simon?
100% I agree. We can easily get carried away when we have these conversations in highlighting all of these scary things to think about and consider. But I mean, let me tell you this, it's better that you hear it from us, and especially on a one-on-one often can be the best way, than you've got all excited because you've got a deal on the table and it's the buyer that's telling you this or asking you these questions. Okay, so it's our role to get you to that position, and also so you're well prepared, you know how to answer it. The first time you ask a question, if you're not sure of the answer, you can make a right mess of it. So it gives you that safe. It's a safe environment, Kathryn. That's exactly what it is. We create that safe environment to get people into that position where they're comfortable. And believe me, it doesn't matter how many times you've done it, you'll always be uncomfortable in a due diligence process and having conversations with someone who's looking to buy your business. We will never, ever be able to fix that. But you will be more confident and more comfortable than you could be by spending some time going through it with us. So that's, I suppose, what I'd say. But patience, absolutely. I was always told from my very first mentor, Simon, you lack patience. And if my mentor was watching this video now, he would say, I told him that. But a few people might have told me that. But this is 20 odd years ago. And patience is absolutely key. So you have to work with us and we can get you to that point without a doubt.
All right, so getting you to that final sale price, that dream sale price that you've just been dreaming of forever and ever and working so hard and sacrificed so much to get there, it is absolutely a possibility. But what we don't want to do is skip ahead and not do all of the things that allow us to get the biggest price possible, get the highest valuation, and actually get that sale across the line. And that's what the headquarters is all about. So Simon and I started the headquarters when we were working together on a client's business. And what we realized is with Simon's experience in buying and selling businesses and my experience in helping businesses to grow, that combination together means that we can help small to medium businesses be unstoppable when they want to get to the sale price that they really want. But what I need you to know is that you need to be just a fraction patient about it. It's not going to be, we're going to do this today and we're going to reach out and we're going to find a buyer. What we're going to do instead is we're going to get you the highest valuation possible, get you the highest probability of actually seeing that sale come to fruition by doing all of the preparation work and growing along the way, giving you lots of opportunities and lots of options to think about what you want to do with your business. But number one, we absolutely do not want to shut the doors, even if it feels just too much right now. There are lots and lots of options for you. Okay, so if you loved what we were talking about today and you want to know a little bit more about what the headquarters does, all you need to do is visit us at theheadquarters.com.au. Right there, you'll see lots of resources about selling your business, lots of things that you can download, you can review, and if it feels right, jump on a call with Simon or I and talk about your unique circumstances. And then we will, if it makes sense, work with you to really understand where the value in your business is, where the gaps are, and what the opportunities are. And we'll create a roadmap for you from there to get you to the sale price that you're really looking for. Or as the case may be, might even be that you want investment or you decide to keep the business because we've made it so profitable and found so many opportunities in it. All right, today has been super fun. I'm Kathryn Porritt from the headquarters. Simon Youlton, my co-founder, joined us today. Thank you so much. And if you loved this video, then please subscribe. We would love you to be here to make sure that you get all of the resources, the videos, and the advice that we're providing to Australian business owners who are looking at some stage in the future to take all that blood, sweat, and tears that they've put into building an extraordinary business and turn it into a sale.